One of the most controversial and confusing ways to acquire property in the market today is buying a public auction. I've been doing it for 16 years, and I hear all kinds of conversations about why you can't buy properties at public auction. Hi, I'm Rick Rickert with American Academy of Real Estate, and I just wanted to step out in front of you today for a moment to share the following with you. We just recently, at the end of 2013, completed 2 Auction Pro Academies. This is a 2-day event where real estate professionals and investors come into the space of education and learn about buying a public auction, things they knew nothing about. And one of the things that we've done a great job of putting together was demystifying the process of buying a public auction. That's really fundamentally what it comes down to. We have people all over the country requesting, well, how can I buy in my county? How can I buy in my state? How can I take advantage of what's going on down there? Is anything going on down there at public auction? And number one, yes, things are going down there at public auction. 16 years ago, I entered the space in 1998. And I've been passionate about buying there ever since. I bought over 3,000 properties for my investors, and I bought at least 200 fix and flip for myself. It's something I love doing. I'm very fascinated with the process, and I enjoy the financial rewards that come out with it. But here's what I'm sharing with you. What we did was we took this 2-day event, and we brought it all together and put it online. There's so much demand. People paid $3,000 to be in the seat, $29.97 to be exact, to come in and be educated by not just me, but other professionals in the industry talking about eviction and lien position and hard money. Hard money was one of the most impactful segments where people literally walked out and went, I didn't know how to put a bridge loan together. I can't tell you how many deals I've lost because I didn't know how to raise my hand and say, hey, where can I get money today to make this deal close? The commissions, the lost investors, the broken relationships, just because I didn't know how to connect the dots. Well, that's what I'm here to tell you. We are connecting the dots. We are demystifying the process, bringing it all together in really over 12 hours of education. You're not going to pay $3,000. We put this together online for you for $99. Whether you're a real estate professional or you're a real estate investor looking to get into this space, it's monumentally important that you take a look at this now. So let me wrap up by saying this. This is a limited time offer. Don't miss the opportunity for $99 to take advantage at your own pace, online in the comfort of your own home, to get this education to see if this space isn't for you. I've been passionate about it for the last 16 years, and I can tell you there are properties to be had regardless of whether the market is up, the market is down, because people lose their home. And families lose their home for personal reasons, not economic reasons. Death, divorce, illness, loss of job, any and all the vices. That's why people lose their home. But their home ends up at public trustee sales or foreclosure auctions, sheriff sales. Whatever it is to your area, you're going to get that information specific to that on this education, and you don't want to miss out. Rick Rickert with American Academy of Real Estate, looking forward to serving you soon. Here at American Academy of Real Estate, we really strive to bring you the best and most up-to-date, accurate education possible. This next segment is all about how to show up for investors. It's one of the ones I'm most excited about because I think it's one of the most important. Real estate investors have more access to money, they're frequent buyers, they are ready to go on a moment's notice, and as an investor or a real estate professional, if you don't know how to show up and work with them, you're doing yourself a huge disservice and them as well. So listen to this next segment, enjoy it. I really challenge you to listen to it twice because there's so much important information in there about how you need to retool your thinking to really show up for investors. Enjoy. Okay, let's take a look at what investors are looking for. They're looking for deals, and it comes down to 2 things. Well, what kind of a deal are you looking for? It's I'm looking to profit from a flip. Okay, and that's what most people are looking for. The distinction from a flip versus a rental is I'm taking my cash now, right? I buy a property today, I clean it up, I put it on the market, I make a profit, I make a $20,000 profit, that's a flip. I take a portion of that money and put it in my pocket, and I take a portion of that and roll it back into what I'm doing and start building, my reserves up from there. The other one is a cap rate based on a long-term hold. And what you're going to find is investors will talk to you in terms of cap rate. That is, and I'll go into the definition of that more later, but it's the cash-on-cash return that they're getting on that investment. So it is, and that's the way they're looking at it. So we're going to bring that concept a little bit more in depth as we go through, because it's really worth understanding so you can talk cap rate with somebody going, hey, I'm looking for a fourplex that is at least a 9 cap. right? I'm going to make 9% a year on my money in this investment. And you have a whole bunch of questions to ask from there. We'll go into the detail of the flip and the cap rate in a little bit later. So interviewing investors. What area are you looking for? Do you want to stay just in the Phoenix area? Do you want to go out of state? Do you want to go out of city? What are you looking for? What is your exit strategy? It's a critical question to ask. If you find an investor who doesn't know their exit strategy, or they're leaning on you for an exit strategy, you might reconsider whether or not that's a right fit investor for you. Exit strategy is the number one starting point in this business. If you don't know what you want to do with the next property you buy, you're already at a disadvantage. Like, I know that the next property I want to buy is a flip, because I want what? I want the cash now, right? I want the cash now or within 120 days or less to make that happen. Is our market poised great for fix and flippers? Is the industry poised in a great position for fix and flip people? I'm seeing a few nods. It absolutely is, right? Because it's a buyer's market right now. I mean, the buyers are looking for inventory that just isn't there. So if you have a decent product in a decent location and it's clean and ready to move in, you're going to get offers on that property, and you're going to be able to negotiate right at the top of the market, okay? Which is phenomenal. It's a great time to be in the market doing fix and flip. So what property type? A lot of people go, Rick, I want to do single-family homes as a rental. And that's always interesting to me, and it's not a bad strategy, and I've helped a lot of people with that. But I tell them, I go, well, have you considered fourplexes? Have you considered triplexes, duplexes? Have you considered something even bigger? And sometimes they go, well, no, not really. And I'm saying, well, because your cap rate typically is so much higher on a fourplex, especially at auction, or any of the plexes than a single-family home. And what else do you think benefits you by having a fourplex versus a single-family home? It's the vacancy rate, right? If you have a fourplex and you lose one tenant, how much of your gross rent have you lost? 25%, okay? On a single-family home, if you lose one tenant, how much of your gross rents have you lost? 100%. Okay? And I mean, that's like a no-brainer to me. So now, are there enough fourplexes for people to buy? There's plenty, but at the same time, single-family homes need to be considered in a different way, to really make that a solid investment. If you can drive it into the plexes, I think it's a much better. And your ability to speak to that is really going to serve them in a whole nother way. They're going to be much happier down the road when, their tenants come in and out on a fourplex, but they maintain, 3/4 of the gross revenue for, 60% of the year, which is phenomenal, and then it's a little higher, a little lower as it goes through, rather than you get a tenant on a single-family home that bugs out in the middle of the night. Sometimes if they bug out, they don't pay your rent, but then, you don't follow up right, and all of a sudden you're 30 days into it, and it's vacant, and the front door's open, and they're long gone. You still got another month before you can get on the market, because you got to clean it up, and you got to find tenants, and so now you're 2 months without rent. Boy, that really digs into your cap rate, and cap rates start looking pretty ugly when that doesn't come through. This next segment is exciting. It's one of the segments that most real estate agents and investors as well have the biggest problem with. It's the fundamental understanding of hard money, and how hard money plays a very important role in any type of investing. When you're buying a public auction, it's absolutely critical to have your hard money lined up, to have that fundamental understanding of hard money, how to leverage it, source it, use it in any particular situation that you need to close a deal. We brought in Adam Child. He's the president of Titan Capital Holdings. This is an exciting segment because he really brings together what the concept of hard money is and how important it is for you as a professional to have it at your fingertips. Enjoy.
Good contract to purchase a property. You know it's going to be a competitive situation. Give us a call. Use our cash to close quickly, and then take us out with the conventional financing 30 to 60 days. So that's just an example, and I'll talk more about it and ask me questions about it as we go through the presentation. But so Titan formed in 2009 to support auction investors, and that's an example of how we've expanded all that. Hard money versus private money. What is hard money? Hard money is an old term, right? Hard money, private money, it's really the same thing. Hard money back in the olden days was if you didn't pay back, something bad might happen to you. That's hard money. but it's really not hard to borrow, correct? It's based on your equity position, your cash in, the quality of the property, your ability to pay, and what your exit strategy is, right? So is it really hard? Has anybody tried to get a conventional loan in the last few years? I'm 24 years in that space. There's a reason I'm here. It's way too cumbersome, even for the best borrowers. So hard money, what is hard money? Hard money is easy money to use as leverage, use it as collateral to pick up investment properties. But if you hear the term hard money, private money, it's the same. We're made up of private investors that put funds into our company that allow us to go ahead and make the loans that we make. How to borrow hard money, and I'll have different slides in here. It's really simple. We do require an application. You can go to the website, you or your clients, TitanCapitalHoldings.com. Some of that information should be in your booklet. Go to the website, download a standard 1003 Uniform Residential Loan application, print it out, get the basic information on the borrower. That's where it starts. We have an awful lot of borrowers who are coming to us and they're saying, hey, we're getting started, we're working with Johnny, we're working with Rick, we're looking at properties at auction, we're looking at other places too. How do we get set up with you guys? That's excellent. Get an application for you or your client, get it filled out, get it sent in to us, we start a file. It just makes it that much easier. What happens when you have one of those deals that you want to close in 3 to 5 days? You know, if you can get us prepared in advance, it puts us in a better position to respond quickly to you, okay? So it does require an application. Find a property, right? Verify available funds. Now, I think all of us as hard money lenders, we go through this. You know, we'll have a big demand on our funds and we'll be fully deployed. It's not a bad problem to have unless you're looking for 100 grand. So I always maintain whenever you're getting ready to run at a property, check with us. We haven't said no in over 2 years because we've got a lot of resources, but check with us, make sure we have available funds. Don't take it, don't assume or take it for granted. Check with us, make sure we have available funds, make sure we're ready for you when you pull the trigger. Inspect the property. I assume you would have already done that. We do it as well. Are you getting yourself into a good quality piece of collateral, or is it an $11,000 piece of collateral but has a lot of potential? We look at that all the same, okay? And you might have questions about that as we go through it, so please ask. And close the loan. It's pretty simple, not like a conventional. Qualifying for hard money, what do we look for? We look for the collateral. So you're going to make a call to me and it's going to go something like this. Hey Adam, we're talking to Johnny, we got a property coming up on Thursday. Here's the address, here's what the opening bid is, but here's what my max bid is, okay? How much can you lend me on that, right? So we do look for skin in the game. We will try to start with as little as 20% down. It just depends. You know, if you're finding a property that's really been run down, is going to require a lot of work, we might look for a little bit more money down, or we might take less money down and hold some of your dollars in escrow to ensure the rehab gets done properly and things like that. We'll work directly with you on that. But it starts with the collateral, because at the end of the day, unfortunately, if something were to happen to you or your investor and we're left holding the bag, we do have to look at it and say, is this something that we can get ourselves through? What's the equity position? Are we protected? Okay, hard money lenders do not use PMI, so we're self-insured. So we just have to make sure that the equity's good, the collateral's good. Make sense? And what's your exit? Our typical loans are 6, 12, and 24 month. I'll show you here as we go further on. We've got the 6-month fix and flip. We've got what I call the 12-month equity builder and the 24-month transitional. I'll explain those more in detail. We do some longer-term loans. We have some clients that were just out of a bankruptcy, the result of the economic correction that we just went through, had their property free and clear, wanted to take some cash out and go do some other investments, and we did a 15-year fixed owner-occupied primary residence loan, 10% principal and interest. They'll probably pay it off in a couple years. So we have those options as well.
One of the biggest misunderstandings in the market today is by real estate professionals and bringing a client to auction. They don't understand how to earn a commission at auction. In this next segment, Mike McCall, our designated broker for Look Inside Realty, outlines that process. It's actually very simple, easy and straightforward to understand. If you haven't brought people down to auction because you didn't think a commission can be earned, now's the time. Spend a few minutes, understand what this is about, get those commissions you deserve, and more than that, serve the client in a whole nother way. Enjoy.
But what I'm here to do is to bust another myth which we hear from realtors constantly, and that is, well, I'm not going to come into this space because, you know, how do I can't make any money because nobody pays a commission, right? Has anybody ever felt that? Have you ever heard that? Have you ever thought that? At some point, right? Okay, well, it's not true. Now, as Rick said, however, the way that you get paid a commission at trustee sale is completely different, right? How do you normally get paid in a traditional real estate transaction? Who normally pays? The seller. There is an argument that it's the buyer, but you get the idea, right? And it comes out of title company, it comes to your broker. Does that happen in a trustee sale transaction? Absolutely not. It is very much a non-traditional way of getting paid. But now to get to that answer, I want to ask you a question which will allude to something which has been said many, many times here in this day and a half. Let me ask you this direct question. What is your relationship with your client, buyer or seller? What is your relationship? And this is not an agency question. What is your relationship? Yeah, I can't see your name, but way in the back.
Lori, provide service.
Provide service. Beautiful. We're heading in the right direction. Anybody else? Knowledge. It's a business relationship. We're getting closer. Fiduciary. It's a P word I'm looking for. Professional. Beautiful. Come on, one more. Profit. Okay, we're even getting closer. How do you create profit with two people? One serving the other. Partnership. Okay? And that's going to be kind of a theme as the rest of the day goes on, is a partnership. You are developing a partnership with your client. And the whole trustee game, the trustee sale game, is just another game piece in that whole thing. So let's get right to it. What do you do if you have a buyer? Forget trustee sale for a second. What do you do if you have a buyer, a seller who doesn't want to pay commission? A seller that doesn't want to pay a commission, as in, for example, a for sale by owner, a FSBO. Lori? Aha, that buyer-broker thing, right? Anybody else, have you ever run into that situation where you have got a buyer that really is interested in that house over there, it's not listed, but we know it's a for sale by owner, or you approach the owner and say, would you be interested in selling? Absolutely, yes, I would, but Mr. Seller, would you pay a commission? Absolutely not. So your only recourse, unless you want to work for free, right, is to approach your buyer and say, listen, this is a perfect house for you. Yes, I agree. It fits all your criteria, et cetera, but you need to pay me. And how do we secure that? Again, it's not, totally airtight, but how do we secure it? With a buyer-broker agreement, right? What am I holding in my hand? Right here, a buyer-broker agreement, right? Now, does the Department of Real Estate or the Arizona legislature or any other entity dictate how much you get paid? No, of course not, right? That's all negotiable. We have certain standards, et cetera, but those are not legal. It's whatever you negotiate. So in this case, let's say you're the investor. Would you pay a fee to someone or some company that presents you with a magnificent deal? The deal of the century. This is absolutely perfect for me. In whatever way it's perfect for you, either as an investor or, if you're a realtor, your client, the investor. Would you pay a fee for that? Probably. So what you do, and investors out there who are listening, I see nobody got up and left, so you're all listening, and you need to know this because, again, a partnership, do we hide things from our partners? Absolutely not, right? And you want your agents to get paid too.
Pre-auction due diligence is so important. What you've got coming next in the next segment is Dan Barberkoff of Sterling Title, who is a master at understanding the title issues that we come up against at public auction. So he's going to give this whole dissertation on everything you need to know, but here's what you really need to walk away with, is understanding lien position and the value of having a policy in place at the time you bid. Sterling Title is one of the only companies we've ever been able to team up with who, with a title policy in place and their commitment, is going to guarantee the entire purchase, including the $10,000 you put down. Listen and learn. You're really going to enjoy it. Understanding the pre-auction due diligence is critical, and Dan takes us right to it.
Melanie said I'm the owner of Sterling Title Agency, and to give you just a little background about title is my first impression is oftentimes what your clients are. When I bought my first home, I thought, this is a ripoff. I said, this is insurance. What do I need this for? Someone explained to me what title insurance is. They said, well, it's insurance backwards on your home. This is a great policy. And I said, I don't care. But what I want to talk to you about is why title insurance came into place, first of all, and what the history of title insurance is. Okay? In Pennsylvania in the 1800s, there was a lawsuit about a conveyance of a home, and it had to do with the seller and an undisclosed lien. And when the buyer bought the home, it closed and everything else, and they went to sue the seller. And the seller said, I relied on my attorney. My attorney told me that I didn't have to worry about this lien. So what did the court do? They said, well, if you relied on your attorney, you must have been right. And the buyer was stuck with the lien. And people said, well, this isn't right. Okay, why is it if someone gets an attorney opinion, I can't sue their attorney? He wasn't my attorney. I have no standing. So what can I do? And Pennsylvania said, okay, we'll start this thing called title insurance. And sure enough, the first title insurance company, the first policy for $1,500 was for the mother, the owner of the company. And that's what started our system of title insurance. And people think of it, well, it's just insurance. But it's a little bit more than that. And that's what people don't think about. What are some things that we insure against? Okay? First of all, we insure against fraud. We insure against bad conveyances, mental incompetence. We insure against improper transfers. We insure against zoning ordinances, violations, other things that come into contact with your property. Why is that really important, though? I don't know if you guys are familiar with this. About 3 months ago, there was a lawsuit that took place over eBay. And this guy said, that's my car. It was stolen from me in 1965. That's my car. Now, this car has changed hands 4 or 5 times at this point. Okay? What happened? He got his car back. Because it's special. It's specific. Okay? And they look at this as a car or an automobile as something that could not be replaced. This 1965 car was deemed, there was no amount of money that could be given to him that would take the place of this car. Well, why am I telling you this? Because homes are the same way. I could come out of the woodwork 50 years later and say, that was my grandmother's house. She was incompetent at the time that she signed that deed, and I would like that back now. If you have title insurance, you're okay. If you don't, you got to give the home back. Now, yes, you could go back and sue the person who sold the home to you and hope that they have the money to pay you back. Maybe they do, maybe they don't. But that's it. That's what you're left with. And why is that important? Well, here, during the seminar, you're looking at properties at auction. You're looking at properties that are going to foreclosure. You have no clue what has gone on in that chain. I could tell you, I couldn't tell you without looking at my insurance policy on the home that I own what happened, what the conveyances were like, who did what. But there's something else that's very interesting about title insurance. It is the only item that goes up in value without you paying more money under an insurance policy. So for the first 10 years, it can actually go up anywhere to 50% of the face value of that policy that you buy, and you spend you pay for one time. This is why it's important. And I'm not sitting here because I want to advocate a lobby or tell you that title insurance is this fantastic thing and you should spend your money doing it. I'm saying everything else we do due diligence on. If I went to sell a stock to you today, you would ask me, where did I go to school? Who do I know? Do I have references? Do I have other things? But with homes, so many times we're lackadaisical. I can't tell you how many phone calls I've received of people that bought homes from friends or other things where liens were not paid off or other things had taken place. And what can I do now? And I can tell them, well, you can sue your friend. But how many of you think if your friend doesn't pay off a $150,000 mortgage that you might see that money from that guy again?
Concerns for any investor or an agent representing an investor in the space of public auction is evictions. What do I do with somebody who is already in that property, whether it's a tenant, whether it is the previous owner, whether it's a squatter? What do I do and how do I handle that? And I know a lot of people who are adverse to even bidding on a property that's occupied. And I'll be honest with you, in 15 years, occupancy has never been a reason for me not to play. I play full out no matter what. But I also pull the players in when I need to do an eviction. I pull players in like Mark Zinman, who you're going to hear from in this next segment. He is a master. These guys have done over 100,000 evictions. So if you're going to do an eviction, you want to do one with these guys because they know how to do it. It's seamless. It's very quick and easy, and it makes sense for everybody. It creates a win-win. So what you want to understand is how Mark puts this out there. There's two ways to go about an eviction. One is the legal process, using an attorney and going through what's called forcible detainer. Now, if you're out of Arizona, it might be called something a little different, but it is the eviction process. It's the legal process through an attorney by which you need to do to get somebody out of a property that you just bought. Now, there's a second way to do it. That's doing the eviction on your own. After Mark talks and after you have Mark's segment, I'm going to come back and I'm going to give you the how-to on doing it yourself. Now, this isn't for everybody, but I'm going to lay it out there for those who get it. It's an opportunity for you to do it yourself and not go through the attorney. But if it doesn't click with you, always hire somebody like Mark Zinman because you want to make sure that you're doing it right. And again, Mark's contact information is going to be on the screen. You're going to have access to that. So enjoy Mark's delivery and then hold on right after that because I'm going to give you an explanation of how to go about doing it yourself and having the best success. Thanks for joining us.
As Rick said, my name is Mark Zinman. I'm an attorney at the law firms Williams, Zinman, and Parham. I think they're handing out some information sheet about us. What we do, our firm exclusively represents investors and landlords in landlord-tenant matters. So if you're buying properties, whether to fix and flip or to actually hold on, we actually work with investors all the way through the process, from going from buying, when you're buying an occupied property, as well as once if you decide to hold on to that property, obviously dealing with the landlord-tenant matter. Rick obviously mentioned the fact of buying occupied properties at a trustee sale. A lot of people are scared of that. People think it's an extra hassle, not sure about the condition of the property. It brings extra issues in that you wouldn't obviously have with a vacant. We see that on a regular basis, and I'll kind of go through that process and familiarize with it, because from my perspective, there's actually a lot of benefit in occupied properties. There's a lot of potential risk, but there's not. The concerns people have with actually getting people out in Arizona is very favorable to the investor. There's a lot of benefit there, and there shouldn't be that inherent people being scared of occupied properties. So we'll start here is generally what we do. Different areas. As I said, we cover anything that you could run into as an investor or as a landlord. And we exclusively are on that side. It avoids that internal conflict I would have representing tenants or people in occupied properties. So in addition to evictions, we actually handle disputes with trustees as well. If you guys looked in your packet, you got the set of statutes, Arizona Revised Statutes, regarding the actual process of the trustee sale. Well, in there's the requirement, obviously, that a trustee release the deed to you after you've paid for it, right? At the day of the sale, you pay your $10,000. The balance is due by 5 o'clock the next day, and then you're supposed to get the deed within 7 business days. Well, what happens if you don't get it? And because of that, we've seen that a lot. Banks are claiming, oh, we're in a loan modification. We couldn't give out the deed. Therefore, you get your money back. And we've handled a lot of those suits. We've sued numerous banks saying, look, we performed as we were supposed to. The investor did. They paid the money. We want the deed. So we handle that. Obviously, we handle evictions as well. And then if you keep on and hold the property as well, obviously you need to occupy that. That's when you run into the landlord-tenant world. Arizona has an entire act dedicated to landlord-tenant issues in just handling, giving tenants 5-day notice to make sure they pay. Obviously, HOAs are a big issue here. Make sure your tenant's compliant with HOAs. And we guide landlords through that whole process of how you manage your properties. We work with investors directly. We work with management companies that work with investors. So we kind of handle the gamut from the large management companies with like 20,000 doors to somebody that may just have two rentals. We kind of work on both sides of that. And finally, of course, there's a note there saying we do fair housing complaints. If you're in the landlord-tenant world, fair housing is obviously an issue. You need to be aware of it. I actually just finished teaching a 3-hour class a couple minutes ago on fair housing, and that's a whole other bubble to get into. Finally, quiet title suits. Suits over litigation. Let's say you buy a property at a trustee sale and they think the former owner thinks he still has a claim and he sues you saying, no, the sale was invalid, it's actually still my property. You unfortunately then have to go obviously defend that case. You can potentially get title insurance to protect you on that. Arizona case law is actually very, very favorable to investors buying properties at a trustee sale. If you go to a trustee sale, buy the property, and the trustee's deed is given to you and recorded, any claims that the former owner had are waived as to you. Basically, under Arizona law, somebody that's losing their property to foreclosure would have to go out prior to the sale and get an injunction to stop that sale. And if they don't, you get clean title to that property, subject to anything that existed before the deed of trust. A lot of people obviously don't realize that. They still file these lawsuits saying, oh, no, it's my property. We were in a loan modification. And we regularly represent investors going into those cases saying, no, the deed has been released. It's the investors. That way you guys can turn around, flip it quicker if you need to, or just obviously have the protection you need that it's your house and you can go and rent it out if you're going to hold it. Also, what we've seen, once you're going to sell your properties as well, that let's say you sell your property, you have never lived in it, you're doing a fix and flip. You go in, do some paint, do some landscaping outside, then you sell it off to an end buyer. And you're like, okay, we'll put in an as-is addendum as well. 2 months later, 5 years later, the person comes back and says, oh, no, there's all these defects. They're in the property. There's foundational issues you should have told me about. Well, as the investor, obviously, you didn't live in there. You don't know what those are. An as-is addendum can protect you the majority of the way, but you can't hide defects from a buyer as well. And so we handle those kind of litigation in terms of, oh, well, I knew that defect. Yes, I disclosed it. Because an as-is addendum will get you a good protection from what those kind of claims, like the defect claims. But there's obviously a lot of litigation on that. And with more and more sales, more and more flips, we're seeing those issues.